Hi traders, welcome to this Blueberry Markets video update with me, 𝖢𝖥𝖣yi, Senior Market Analyst. In this video, we're going to be taking a look at the price of gold, and we're going to take a look at the commitment of trader reports. One of our loyal subscribers, Denise, asked us what are the commitment of trader reports looking like for gold this week. So I wanted to take a look at that, and I wanted to just break down if there's anything significant there or not that we can take into account at this current moment in time. So we are on the gold chart that is behind here. I'm just going to switch over to our full screen mode. And you can see here that we've got the commitment of trader reports up here. Now, this is provided free of charge by barchart.com, which we will add the link in the description of the video below if you did want to take a look at this chart in particular. Now, what they do is they plot the commitment of trader reports on here, and so you basically can see that we've got the long contracts here, you've got the short contracts here, and then you've got the sort of net contracts running below. Now, what you'll find is what we want to try and look for in this market in particular are the peaks or what are the contracts doing in line with price. So we can see that price recently obviously found a little bit of a peak and we started to trade lower. Now, what I would expect is two things. So depending on who you follow on the commitment of trader reports, you've got the sort of commercials. Now, the commercials are in the markets for business purposes. So essentially, as price decreases of the commodity, you'll actually see the commitment of trader reports showing that the commercials are buying, because as price is decreasing, they want to buy it because the commodity is cheaper. On the flip side of that, if you are what we call a non-commercial entity, that is almost like hedge funds and large sort of trading funds and investment firms. And what they're doing is they are following price action. They're almost trend traders, essentially. So what you'll see in that term is that as price decreases, they will also sell with that price as well. So there's two kind of sides to it. There's also the non-reportables as well, but they don't particularly matter too much when it comes to the price of gold. But essentially what's what we want to particularly follow, I feel, is when you see a report reach an extreme. Okay, now a good point to sort of show you here is we've got the chart here. You can see that I'm on a 3-year chart. I'm just going to open that up to a 5-year chart. The reason why I'm going to do that is because I want to show you the sort of peaks when price sort of obviously comes to a critical area, or what I would like to call sort of an extreme in selling. Actually, let's just go back to that 3-year. I might just move it over though slightly, because what I'm in particularly looking at is the bottom area down here for now. So you can see at some point around about, let's say, 300,000 contracts here, the market seems to sort of turn. Okay, so you can see at these points, so we had it in September, January 21, and probably around February 22. Now, to kind of coincide with what happens with price there, if I was just to draw a vertical line when those contracts are around about 300,000 on the short side, you'll see or notice certain things in the market there. You'll see that price has traded to the downside here. We had a little bit of a spike back up. Then we could see the contracts actually went a little bit higher here. Then the short contracts then went back to that extreme, and price continued to the downside. Obviously, there are other factors that happen. The commitment of traders is not a be all and end all. It's just a sort of another sort of confluence that you can add to your sort of trading tools, your analysis. Again, you can see around about February 2022, we spiked up into that key level of resistance, which was here around about that $2,000 level. You can see that the contracts reached around about 300,000 again. Again, that's an extreme where price has started to fall, and then you can see what followed from there. At this current moment in time, the contracts are not near that extreme. So obviously the extremes continually change. Now the extreme here is all the way down through here, which again is around about, I'd say, that 300,000 level. Let's just see. Yeah, around about 300,000 contracts. Now we're not really at that point yet. So that kind of tells me one or two things. It's either the market's not really interested in selling at these prices right now, or we haven't really seen any kind of buying influence either. To be honest, it's pretty flat. You can see we're on about sort of 136,000. You can see the net is around about 20,000 into the positive. So at that point, it's kind of telling me that we're a little bit flat here at this current moment in time. I would be interested in the commitment of trader reports again. If price was to rally here in gold and we saw price back towards the highs here, if the short contracts are around about this $300,000 area, and potentially that area then would become something of interest for me. If we reached this high here and we weren't at that level, let's say we're trading around about the sort of levels that we're trading at now, then it wouldn't really be of interest to me. So what I would say about the commitment of trader reports is what I would like to look at are those extremes. Do you see sort of, price or the commitment of trader reports at extreme selling areas? And again, why would it be at an extreme selling pressure? Well, because price has rallied so significantly, they're going to get more for their money, right? So they want to be selling when price is high. It's the old sell high, buy low sort of philosophy, especially when it comes down to the sort of commitment of trader reports. So that's what I would say there about gold. At the moment, to me, it's a little bit flat. So we haven't really got too much to go off here with the commitment of traders right now, especially from that sort of mid to long term point of view, because this is produced every week. So you tend to look at a weekly chart when it comes to the commitment of trader reports. There are other factors that are surrounding the market this week. We do have some quite a lot of US data coming out this week. So that could obviously have a really large influence on the price of gold. What we talked about in our previous live stream was the fact that we were seeing some negativity coming into gold, and we were watching this 1940 handle here to see if there was any kind of rejection and back to the downside. At that point as well, we were watching this zone through here. We identified using the volume profile tools and the live stream that there was a really strong level of support coming through around about the 1917 handle, and you can see price is still technically trading above that at this current moment. But one thing we know is at the moment that the US dollar is relatively strong. So what we want to be doing is really following what is that US dollar doing? Is it getting stronger? Is there data coming out that could suggest that it does continue to get stronger? And this week we do have some kind of influence as to if that can happen. If I just bring in some of the data going forward this week, you can see that on Wednesday, we've got core CPI data. CPI year on year looking to increase from 3.2% to 3.6%. So is that something that could influence the US dollar to get stronger going into this week? Is what we're seeing right now a little bit of a sort of reaction to, obviously we had some data overnight from the Bank of Japan, which was a little bit of a surprise to the market. The market is digesting that information, but is it enough to try and turn the US dollar around at the moment? I think we may still get another week or so of that US dollar strength, because obviously we're going into the FOMC event coming up next week, which is next Wednesday. I believe it might even be the following Wednesday. Yeah, sorry, next Wednesday, the 20th. You can see here that we do have that federal funds rate, and it is looking at a pause at the moment. What the market is trying to feel out is, are they going to pause? Is it going to be a hawkish pause, or are they going to hike again? I don't think they will hike, but dependent on the likes of the CPI data here, the core retail sales, even the PPI data, that could be really telling of whether it's going to be more of a hawkish pause or not. A hawkish pause pause, I would think we would get some kind of bullishness continuation out of the US dollar at the moment, and that could cause gold prices to continue down. I think at the moment we're looking at it, the daily chart is very range bound here. We're not really trading above 1925 at the moment. Every time we do, we see sellers jump back into this market here. Looking at the 4-hour time frame, you can see that consolidation building. And I always say consolidation is good because it tells us that buyers and sellers feel like there is a fair value here at the moment, and they're buying between and selling between these 2 points. What we want to see is a break. If we get a break to the downside, then price could be heading towards these lows here. Breakout to the upside, obviously we're probably going to be targeting back at the 1950s. It's all going to depend on that US dollar data this week. So if you are in gold at the moment, then I think you can look at that potential and see what happens to price around about 1917 again. If you're not in gold, then something to watch is this consolidation. Hopefully you enjoyed that video update. If you did, please leave this video a thumbs up. Subscribe to the YouTube channel for more Forex trading content, and I'll speak to you in the next video.